It's Casual Friday, but I think I'm the only one who got the memo. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Wall Street ending the week on a down note. Officials at the Federal Reserve said tapering of the bond buying program could begin in October. So if you thought this dance was over, you were wrong, like all of us. Joining me in studio today, Ron Gross and Tom Gardner. Let's talk about this, because this really is
Ron,
the
you
story
look great, first of all.
Thank you very much. Decided to class up the joint.
I apologize for interrupting, but you look great on this Friday.
I'm the only one getting the Casual Friday memo. This really is the dominant story of the week. From the way the market moved on Wednesday when Bernanke surprised people by saying there wasn't going to be any tapering. Now we see at the end of the week, it could be next month. We're people at the Motley Fool who focus on stocks. What does this do for you as someone who analyzes stocks?
You know, they're going to taper at some point. They're going to do it gradually. They're not going to rip that Band-Aid off. So if we know it's coming, but we can't predict when or to what extent, I think we have to kind of put it aside. And we have to invest in companies, not focus on stocks, not even focus on the stock market. Let's focus on companies. Buy good companies that you're proud to own, that you want to own for the long term. If they go down when Bernanke announces a taper, that's fine. We're long-term holders. It's going to be fine. Let's not focus too much on these announcements.
Some people saying that Bernanke missed his opportunity on Wednesday. He got the green light from Wall Street. He really should have done it then. I'm not saying we rip off the Band-Aid, but at some point, should Bernanke just tune it all out? And
they could have started at $1 at a time. You know, I am surprised that they didn't even start with anything this month if they're thinking about going forward with it in October. You know, the analogy that I use isn't necessarily the friendliest, nicest one, particularly on a Friday, but if you imagine losing control of your car on the highway, that's like the journey that you can take between deflation and inflation. Things got out of control in 2008, 2009, and now we're whipping the car back in the other direction. And I think for investors, you've got to build a portfolio that can handle inflation over the next 10 years. I don't know how big it's going to be, but it's going to be an issue, and that means you've got to find companies that can raise prices. And that's Warren Buffett's favorite factor for great public companies. They've proven that they can raise prices from one year to the next, and they're going to have to be able to do so over the next 10 years to succeed for us as investors.
You know, Chris, it's interesting. If you know that they're going to taper at some point, and the market will probably react negatively, it's very, you kind of want to say, well, shouldn't I do something about that? Shouldn't I move to cash? Shouldn't I sell stocks in advance of that? And market timing, it can be kind of intriguing, but it's very, very difficult to get right. So what I say is, you should always be looking at your portfolio. Always look at stocks that perhaps have run too far, that you don't believe in anymore, that don't have enough upside potential left. If you have those at any time, but maybe especially now, nothing wrong with selling them, moving to cash, reallocating it to something you like better, or holding on to that cash and waiting for opportunities. But let's not market time, and let's not hinge, whatever Ben says, that's what we're going to, react to.
Is it a given that when the tapering finally does start, it's going to continue for some amount of time? Or could we see a scenario where they taper for 1 month and then say, wow, the reaction was terrible, we're pulling back?
I feel like they're setting the precedence here. So, they can make any decision they want to. They're in a pretty powerful position. And that's one of the reasons I would have started a little bit now. Because, hey, if you can then show, we're going to pull it off the side of the road now for a little bit to go back to my car now.
Sure.
We're gonna slow this down a little bit, and so I think they have more control, and they should have started it in some small way. But in the end, we're going to see the taper come, and investors have to be prepared for there to not be as much new, fresh, printed money coming into the marketplace.
All right, let's talk about some of the stocks that hit all-time highs this week. 3M, Amazon, Boeing, FedEx, General Motors, MasterCard, Nike, Starbucks, Visa. This is a pretty good cross-section of the U.S. economy. Out of that group, is there one that you gravitate towards?
Well, there are actually a lot of really great companies. Amazon is a first-class company, as well as many of the others. A company I like to watch because it's a bellwether is FedEx. And they've had some tough times over the last 6 months. Things have gotten better. They're hitting the 52-week highs. And they've made positive statements, perhaps over the next 3 to 6 months, that they're going to be able to raise some prices because it appears things are firming up. So that's something that I like to see, and maybe I can extrapolate that to some of my other investment ideas.
Do you get nervous when you see a stock that you own hitting an all-time high, or does that just get you excited? Because I feel like invariably, part of me just thinks, gosh, this can't last. I think
it's a good tendency to get a little nervous. A good tendency. We're accustomed to getting fearful when things are down and excited when things are up. So if you counterbalance that with a little bit of hesitation when you see new highs, but great companies hit new highs over 5, 10, 15, 20-year periods. I mean, Starbucks has hit a lot of new highs since coming public in 1992. So you really want to follow the quality of the business. And I'll tell you, somebody who's very influential to me here at the Motley Fool's, Morgan Housel. And Morgan has written reports for the service that I run, the Everlasting Portfolio, MF1, and just really been talking over the last year and a half about the American consumer coming back. And that really helped me in my evaluation of MasterCard. I mean, I was going to invest in MasterCard anyway, but it gave me the confidence to go back even as it hit new highs, and here it is hitting new highs now. And I still think it's an unbelievable business. They have a great CEO, they have a great culture, the consumer's coming back at, in certain areas of the economy, and they're using MasterCard.
Our colleague Matt Argesinger on Wednesday, after the pop, the Dow and the S&P both hitting new all-time highs, made the suggestion, some people might want to look at their portfolios, take a little money off the table. Are there stocks out there that you think the same thing?
Yeah, there's some selected stocks that I think have run maybe a bit too high. I think Groupon comes to mind at an $8 billion market cap. I think it's a bit pricey. I think they're restructuring. They're doing some things other than just the coupons at this point. That could be interesting. I think it's got the market excited, but $8 billion is a bit much for me.
I feel kind of bad about calling them Grouponzi for the time that I did. They're fixing things over there, and it's been a nice turnaround.
In terms of stocks that maybe have gotten ahead of themselves or just maybe don't have as bright a future as others, what do you see out there?
Well, it's so funny. I mean, this is a company that I love, and I'm a shareholder of it, and I know Ron has it in the $1 million portfolio, and that's Google. The reality is that when you look at the research, though, when companies become of a certain size, you're losing upside opportunity with them. I mean, I'm not saying that we can't have a $1 trillion company. Of course we can. It's just that getting there is going to be a tougher road, both in terms of the management of 50,000 plus employees, the management of the Justice Department, pricing, advertising pricing has already been raised in Europe as an anti-competitive issue. I just think that Google today, I have no questions about them as a business. In fact, I feel greater about them as a business than ever before. But when you have the market capitalization that they do, it's not as easy to get the double. So it's not one that I'm looking to add to.
Yeah, I think that's an interesting point. At $300 billion, can it be a multi-bagger going forward? When I think of it, I think no. But I think I can get 40 to 50% return out of it over not too long a period of time. So my annualized rate of return would be, especially in a zero interest rate environment, would be pretty attractive.
And it's a great company. It's a safe investment.
You can't use tapering as something you're watching next week because we've beaten that horse. But what is one thing you're watching next week?
Sure. Well, Apple introduced their phones went on sale today, both the 5S and the 5C. I'm very interested to see what the numbers look like over the weekend. Some analysts are predicting it could be up to 6 million units.
Are you upgrading, sold. Ron? Are you upgrading?
I am actually going to upgrade. I did not upgrade last time. How about yourself?
I'm upgrading too.
Yes,
I am.
You are too, and you're going the C or the S?
Haven't decided yet.
Okay, got it.
Probably not the 5S.
Got it. So there are three of us at the table upgrading.
Yeah, and so I'm very curious to see how those numbers look. The whole investment thesis is not based on just a weekend's worth of numbers, but it's one indication of is Apple getting back to being a growing company.
All right, one thing you're watching?
Tapering. Oh, I'm not allowed to say.
Sorry.
Come on Friday. Can't I just sneak that in? So on Tuesday night here in the D.C. area, I'm interviewing Seth Goldman, who's the founder and CEO of Honest Tea, which was acquired by Coca-Cola in 2011. And what I'm interested to hear from him is how things are going after the acquisition. You have a great company like Land's End. They were acquired by Sears. You never heard about Land's End ever since. You have a great company like Honest Tea, acquired by a great company in Coca-Cola. But my curiosity is the world's changing. I think people are drinking fewer and fewer high fructose corn syrup, and I think that's going to spread around the world as people get smarter and smarter about what they're putting into their body. And Honest Tea is a much better solution, so I'm hoping to hear that they're growing rapidly inside of Coke.
All right, for Tom Gardner and Ron Gross, I'm Chris Hill. Thanks for watching. We'll see you on Monday.